In this video, we will talk about a repeatable trading pattern on gold. You can as well apply this on any other trading instruments, but avoid shares, bonds, and some other commodities that have less volume. So basically, we are going to talk about the Asian range and then finding an entry in relationship with the Asian range. Sit back, relax, and learn something new. Here's the pattern definition. We know that the market is driven by supply and demand, and on this channel, if you have been following us for quite a long time, you know that we trade the institutional market maker method. And please hit that subscribe button so that you won't miss any of our videos as we upload. Most of the volume is put by the market makers, which are big players within the forex market. These guys actually makes their liquidity for them to be able to trade. As I always say, they cannot press buy or sell at will like how we do it as retail traders. So they need to actually make liquidity available for them to actually be able to place a trade. So in this pattern, we try to enter at discounted prices of the floor, or trying to mimic how these market makers are actually trading. Therefore, we need these 3 steps to follow as illustrated below. First step of this particular pattern is to look for an inducement move. An inducement move is actually a fake move that actually or mostly comes before the London session or in between the session or the session changeovers. Then we need to observe the Asian range. From that Asian range, it actually sets the high and low, the initial high and low of the day. And then after setting the initial high and low of the day, we need to see price coming out of that Asian session range, making the inducement move. After an inducement move has been issued, we now wait to see the price retest 50% of the Asian range. From the 50%, we need to see a candlestick reversal pattern near or right at the 50%, wherever we need to see a proper candlestick reversal pattern. Then the last thing that we will need to do is actually to observe the flow whilst we are in the trade and being able to catch 50 to 100 pips on that particular flow. So let's now go over the charts for examples. But before we do so, check out our free Telegram channel. I'll leave the link in the description box below. So likewise, how we have defined the Asian session range, which is the box in blue, we are saying the first thing is to see the market go above the Asian range as an inducement move. The going above the Asian range is actually to convince traders to take positions that are later going to be hit before an actual trend is set. This is an Asian range, and it's actually a common session that is available to us. After that, we can see the market went up above the Asian session high, and that was actually being done to induce traders to take longs. After that, we can see the market came back to take out retail traders stop losses, and our entry was going to be at the 50% of the Asian session range. In that case, we could actually see this on the smaller time frame so that we get a proper candlestick reversal pattern. But if this week was going to be a miss, we could actually enter at this bullish engulfing pattern that occurred at the start of the US session. Then we can see on the following day, we had the same particular pattern that we are talking about. The market went out of the Asian session range, and then it came back to the 50% of that Asian session range, and several candlestick reversal patterns was issued our entry, and we could actually make our entry to the upside like that. In this case, we were waiting to see this was a proper inducement move. However, the market could not come back to our zone or our point of market interest. Therefore, it was a pass or it was a miss. In this case, we had a proper inducement move. The market came back to the Asian session range 50%, and our stop loss must be put above the high or the low of the Asian session range. In this case, we were going to make our entry. The market was going to shake us, and then eventually it went our direction. In this case, we had an inducement move, which was proper. Retest of the 50 was issued, whereby there were candlestick reversal patterns, and the market actually went into the following Asian session. I would advise not to hold trades overnight, because whatever happens usually in session changeovers is not so well for us. Therefore, this trade consolidated at entry at the Asian session range and at the 50% of the Asian session range, and the market got into another Asian session. In this case, we had a proper inducement move to the upside and then retest of the 50. Unfortunately, this is the case whereby I was saying in some cases they may not come to exactly the 50% of the Asian session, but they may come near, and you are there to see reactions as well as to see the candlestick reversal patterns. So in some cases, probably you are going to make an entry at this point where you have fully confirmed that we are no longer going down like that. In this case, going forth, we can see there was no trade because the market actually consolidated within the Asian session range for the war day. This was the high, this was the low, and the market did not break either of those highs and lows. In this case, we had a break of the low of the Asian session, which was proper inducement move. And after that inducement move, we can see that the market actually came back to the 50%, gave us a beautiful candlestick reversal pattern, and went our direction. So basically, this strategy is actually something that can help you, something of high quality. And I receive a lot of questions on which particular strategy do I use. I teach that in the advanced course as well as the one-on-one. You may subscribe for any of those programs to find one strategy that you can follow. Otherwise, all these strategies are basically to give you an assegai of strategies, a bag of strategies that you can use in each and every situation that comes in front of you when you are trading by yourself. On that note, we come to the end of this video. Thank you for watching. Like and subscribe, and see you on the next one.